Good morning, traders. My morning video. Uh, I will have this posted on X and on StockTwits as well. Please like the video if you get a chance, and appreciate any comments, ideas that you have below the video there. So, I'm here to make money just like you guys. Okay, it's a free video, free resource, and please retweet me if you get a chance. Okay, I'm going to start with the VIX this morning. If you guys think the markets are going to come down, I'd be very careful, or yeah, come very careful on that thesis. We still got a gap below here on the VIX that has not been satisfied, and I would say at the very least, before we see any type of significant sell side action in the markets, you're probably going to feel this a gap on the VIX, this immediate this week gap on the VIX, taking us down to, I don't know, what is that? Go daily real quick. We'll come down here. And this close right here was 1724. So I'd be looking, trying to fill this gap at some point in time, uh, the next few days uh, in the VIX before I'd be even thinking about looking to the short side in the markets. So be very mindful of that. About a dollar away right now. We came down in the overnight session already to what was the low? 1811. So uh, that's just one of those things I'd be definitely keep an eye on this morning. Okay. So as far as the top problems in the market that we want to keep watch every day, so far, in my opinion, what we got going on here on the dollar is a bear flag. Okay, guys. So this, and we're still into the support digestion area. So until this breaks, the market should be supported. But in my opinion, the dollar is bear flagging. We'll see how it plays out going forward here. This is one of the top watches we want to have if we are going to be looking for turmoil in the markets, in my opinion. The dollar, and then give me a second here. I'll pull the other up. Another one I want to watch here, guys, very carefully here. As you see, we have an engulfing candle, weekly engulfing candle on the USD JPY. We've already poked out above last week's open. Okay, so as long as this thing is showing bullish signs, that is supportive of the markets because that is your carry trade in the markets. Okay, guys. So this here is not giving us any warning sign as of right here, right now, today. And as long as this is not starting to trend in lower prices, that suggests that the overall broader markets are somewhat supported. So be very mindful of that. Another thing to look at this morning, that's our bonds. This is our next real problem area of the markets, which if we're going to continue to see turmoil in the markets, we will see a further breakdown in the long end of the bond markets. Okay, so this is our second major uh, watch going forward if we're looking for bearishness in the markets. Okay, we held this very critical support from uh, the first of this year. Very critical support. So far, we're holding that. So, just keep a very close eye on this going forward here. It's technically, because we have not gotten up into this next tier in our primary channel, this is technically bear flagging below the channel. So that's another thing. And we have rejected this bear flag even the past couple of days here. So be very mindful here. We're finding resistance right where you would expect to bear flag out. So so definitely keep this on watch. We want to see this week's highs to become a breakout point in the ZBs to the upside to alleviate a lot of that downside pressure. But right here, right now, this is technically bear flagging off of very major support, current year support. So definitely keep that on watch going forward here. ZNs, a little bit different scenario on the ZNs. You see that the ZVs are at year lows, okay, whereas the ZNs aren't so much. So the shorter you go on the yield curve, the yields are not nearly as displaced. So basically, we're getting the big displacement on the yields on the very, very long end of the yield curve. And actually, that's the big problem because that's where your mortgages and stuff are. And that is still the sign of end stage uh, market cycle. So we have to be very mindful of that going forward here in the markets. So, excuse me. So things I got going on here, the fact that we've come up and this, very critical resistance right here, that's acting as resistance now. They're turning this into resistance, not support. Very important to note that going forward here. This looks more and more like a bear flag. So suggesting that the bonds are probably going to come back down again. So be very mindful of that going forward. And I want to mention also, this is really cognizant of the dot-com bubble in my back of my mind because I lived through the dot-com bubble, and what we basically had at the end stage of the market cycle in the dot-com bubble, we had a lot of money on the sidelines that ran into the markets to support uh, all these dot-com companies. They became publicly traded companies, got all these massive valuations and stuff, and they never ever made money. And when the money coming into the dot com ran out, that's what caused the big breakdown in the dot com bubble. Well, the similar situation is right here. Is we've still got a lot of money on the sidelines looking to for performance. And what will ultimately end up happening, including some of these meme coins and stuff, it's the wild west in these meme coins. A bunch of this money is going to be coming into the meme coins or these new AI companies, these new publicly traded AI companies that will never make money. There will be too many players in the space, and that will probably lead to a very similar situation we had with the dot-com bust. And all the earmarks are there that we're setting up for a similar situation as the dot-com blow up. Um, but there's still monies on the on the sidelines. It's whenever everybody, all these brokerage accounts are uh, fully 90+% into the markets. Everybody's on leverage. That's whenever the big dot-com stuff starts to really implode. Okay, there is heavy leverage from the retail sector in the markets currently, so that's what makes it very dangerous already. But that does not mean we're not going to continue to go higher. Okay. Okay, like I said, what's really important this morning here, our top volume on our futures this morning is the way it should be. ZN. ZN is our top volume this morning on the futures. So obviously, they're trading heavily the dangerous part of the markets in today's session. So, we'll definitely keep that on watch how this plays out. That's going to give you a very good indication of just the bullish or bearish sentiment going into the rest of the week. So, be very mindful going forward here. And we really have a nice little bid in the NQs this morning. So, okay, the talk of the town this morning is NVIDIA. Had earnings last night. We're rallying this morning. Some things that I got going on here. I got some fib fans on my charts here. We got a inverted head and shoulders breakout here on NVIDIA. Some things that I'm looking at here. And you can put your fids based off of the true breakout, or you can put them on the range breakout. The true breakout suggests that we could be going to 145, which could very well be that is a very resistance area. You can put a channel right up here. That's a very strong, that was a liquidation area. So you can clearly see that there was heavy liquidation at this price point. So be very mindful of that. This whole area right here, this is a major resistance area. We're currently not breaking above it, so that's a little dangerous, knowing that we're not actually breaking out above that area. So it gives us a little bit of warning, the fact that we're not breaking above this, what used to be a major liquidation area. Okay. Another way of doing this, activate. is to bring your fibs down to the breakout, the range breakout. So this is actually an inverted head and shoulders down here as well. And this suggests we might be overbought and currently on this earnings run up. So be very mindful of that as well. Uh, so we know heavy liquidation, heavy resistance above us. Um, this here is now, I can turn that green now. This was acting as resistance before the numbers came out. So we don't have any confirmation. I would personally think, since this was such heavy resistance going into the numbers, they may want to come back down and back test this resistance before knowing that how much resistance there is up here. So my primary thesis would be very careful on the long side, looking for a back test of the breakout here in the next couple of days. Okay, so that's just my food for thought here on the video going forward. Okay. I was calling out in the room yesterday with around the 200 bullish Apple. I said be very careful about shorting Apple, and we are continuing to rally higher. This morning we got this down here, this double bottom back test down here. I was calling it out down here in the 195 area, and we're continuing to pop here on Apple this morning. Just basically in a channel. It looks like a channeling pattern down here at these price points. So be very mindful of that on Apple. It looks like we could be coming up, the 209, 2010 today. Very easily could be going to 209, 2010 in today's session. Definitely want to keep this one on watch going forward here. Okay. It looks like Hewlett Packard had earnings. It's gapping down on its earnings this morning, taking a big hit. So be mindful of that. Our Chinese internet names this morning, catching a little bid this morning. We're coming right up into this resistance area. So this is a breakdown pattern. So we've tried to look above and failed, and now we're trying again. So this is the third attempt to try to break out above. So a little problematic to be trying to take this, and we need actually higher prices to be for a safer trade. I'd be very careful trying to push that trade. Our SMH get driven largely by NVIDIA here. It is above last week's high, so that is somewhat supportive. I would suggest that keep a really close eye on SMH, probably even more than NVIDIA, for the back test of last week's highs to see if that becomes new support. That would be one of my top watches this morning to see if SMH, the back test of SMH becomes supported for a move up into these prior liquidation highs in semiconductors. So that would be one of my very top watches this morning. Okay. Okay. AMD is active this morning. So it's clear we have an inverted head and shoulders playing out here on AMD. But it's important to note that we've had one attempt for a breakout that has failed. Okay. So you should be drawing your chart a little bit different than what you would otherwise do. I would personally probably look at this area right here as a major resistance area, guys. So going forward here, as major resistance coming right, yeah, right there probably. I think here, yeah. So I would be looking at that as major resistance here in AMD until it proves otherwise. I'd feel much more confident um, above this high right here on AMD because this is acting as major resistance. This break right here has proven to be major resistance. So I would really want to see price acceptance the next tier above that. So basically over the 132 before I'd be really getting excited about that chart. So just something to think about. I like this really constructed chart on ARM holdings this morning. It's too bad we missed the breakout. We've been stalking this breakout. We had this inverted head and shoulders, came down, it back tested the head and shoulders. Okay. If you got in here for NVIDIA's numbers, that'd been great. The 125 area, because this thing is going to pay people big time this morning on ARM. That was the trade to have, is the breakout, retest, and taken off to the moon. So very important. Now we're looking for the 143.44 area for the major back test, which we probably get today. So I don't see little reason for it not to get at least the back test in today's session. Um, so be very mindful of that. And as you can tell on the chop, you go actually entering into a chopping zone. So we could very easily blow right through that level as well. I'm just saying the first attempt could just be a back test, but very easily just blow right through it because this was a former chop area in the price action. Palantir's bull flagging for the breakout. The Russell IWM. We have a weekly Ichimoku backtest here at the 213 area. Could very well be in the cards, setting up for a push into that 213. We have an inverted head and shoulders scenario here. Major resistance that has not broken out. So we definitely want to keep this on watch. We're just doing a back test here. I would prefer myself to be shorting the resistance, but we'll see how it plays out here. That would be my primary thesis, to short the resistance, but we will see how it plays out. Google looks like really good chance we're going to be 182. We're into resistance as we speak, but as you can see here, that this was more of a chop zone. It wasn't really resistance in the past, so be very mindful of that. Okay, we're into what has acted as heavy resistance before here for Broadcom. So be very mindful of that. I would not be initiating a lot of longs at this price point. As you can see right here, we're opening right there into that liquidation. This has acted as a major liquidity spot. So be very mindful of that going forward here in today's session. I would primarily be looking at short. I don't know if that's the right trade or not. The markets might continue to go higher, so just be mindful. Quick rundown of the indices real quick. We are technically bull flagging over a prior high, resistance high area this morning. So be very mindful of that. They want to turn that into new support in today's session, and we are above last week's highs. So be mindful of that. So you have two things above last week's highs. So you need 59.91-ish to become new support. So we have to be very mindful of that going forward here. So we need these highs right here to become new support. If not, we can very easily fall back down here. So, like I said, it's still looking like a bull flag early on in today's session. Okay. NQs potentially into a bear flag. So be very mindful of that. Potentially into a 30-minute bear flag here on the NQs. So I don't like to see it coming in, seeing us coming in. See how we're rejecting right here at this level. So be very mindful of that in today's session. Potentially starting the session into a bear flag, but we are above last week's highs. So that gives you a back test of last week's highs. That would be our primary thesis. I had mentioned this before on the SMH. We definitely want to keep that on watch, seeing if they want to find support at last week's highs on the NQs. Okay, and then the Russell, similar situation. 4-year resistance area. We're rejecting it this morning. Like I said, I was really looking for the short on the Russell at that 4-year resistance level, and we're failing. And like I said before, you tend to feel the gaps on the Russell. We could very easily be coming all the way back down, And I did call out a very good, uh, was that Monday? A very good long entry point in my Monday video. We came down to 2060. I called it out in my video, and I talked about how Russell fills its gaps. It came down, filled the gap just to rock it back up. This turned out to be one of the best trades of the day if you did the lottos. If you would have gotten the 20, bought down here at the 2060 back test for Monday, that would have been absolutely one of the best trades of the session on that gap fill. So be very mindful of these gaps on the Russell anytime you're seeing them, because like I said, those tend to be uh, you can either trade for the gap fill or after the gap fills, trade to the long side. That is a very irrelevant trade to be keeping an eye on in the future. Okay. So, like I said, major 4-year resistance above us here on the Russell. And the bonds just are not screaming to me that I want to be overly heavy in the Russell yet. They still don't look very healthy. The 10-year and the 30-year, they're still not looking that healthy. So I still prefer to short the Russell as long as the long end of the curve continues to show problems. Okay. Thanks a lot for watching, and like I said, leave comments below.